Hello and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good afternoon. It's Friday, 21st of August. 4 p.m. Market's just closing now. Have a look at how it went today. So the All Ordinaries was down 0.34%. So pretty much what we expected for the day based on the estimates. Let's have a look at the ASX 200 and see how they performed today. Hope you all had a good day. Weekend ahead. Okay, so we've got Zip Pay down 14.43%. Telix Pharmaceuticals is down, sorry, it's just a bit slow, 10% there. Redox, which is a specialty chemicals company, and they are down 8%. Super Retail Group, 7.5% down, giving back around 12% yesterday, so nearly half of yesterday's gains. Pro Medicus down 6.62%. And on the positive side, we have got, NRW Holdings, which is a construction and engineering company. They are up 7.5%. TPG Telecom, they're up 7.5% also. They had earnings out today, so the market must have looked positively on those figures. Resolute Mining, which do gold, up 5.93%. Liontown, which does specialty mining and metals, is also up 5.6%. And finally, Medibank Private is up 5.1%. Now, they were on one of the lists yesterday, I believe, so I thought it was a drop. Let's have a quick look. Right, so yeah, they did have a steep drop 2 days ago, and that was, yeah, looks like it was out on earnings. So they've, recovered nearly all of it. So they're back close to the $5 mark. They're at $4.95, and pre-open Thursday they were at $5.03 before the results come out. I did highlight on this morning's video, there was 5 companies that we were watching that had earnings out today. There it is there. I made a little watch list just to go through that. So the first one was BSP, I think it was, BSP Financials, which is a bank that operates in Papua New Guinea and throughout some of the Asia Pacific region. And so they put on 1.2%. I did stop on this company because I'd not heard of it before and was surprised to see it in the banks. It had earnings out. It's not a top 200 company. I just did a search on what companies were releasing today, and I did just highlight the liquidity of this stock. Now, on market open this morning at about 10:15, there was 6 trades for the morning so far, so in about the first sort of 15 minutes. And now we're at market close and they've had 10 trades. So for the rest of the day, they've done 4 more trades, a total of $8,200 for the day, or 1,042 units. So I was just wanting to highlight that if you purchase into a stock like this, if you want to sell for whatever reason, you don't like the earnings, you need the money, you might have difficulties getting a price that you're happy with, and you may need to sell down to the left-hand side here to these buyers at a lower price. But yeah, 10 trades is pretty low. So next we've got Enero Group, who is a company that does advertising and marketing. They were down a whopping 18.64% on their earnings. And I also highlighted in the video this morning that it's a lower price stock. So it's in the 20-cent range, and just 1%. 1 cent share price move at 20 cents is close to 5%, depending on which way it's going. So 5 cents is pretty huge on a 20-cent stock. So if it's gone from 29 cents to 24 cents, that is the same as, say, a $29 stock going to $24. So it's a pretty big move there. Let's just have a look at their liquidity. So that's a bit more respectable. They've had 5 million units today, $1.2 million traded on 424 separate trades. Next, we've got MaxiPARTS that do auto, truck, and motorcycle parts. 13.59% higher. Now that we are seeing a few of these companies that do like automotive parts or car parts and truck parts making these lists, so they must be doing well. And then finally, TPG Telecom again, 7.5% higher. Let's just have a look at the portfolio. Yesterday, we saw one of my stocks, Ascent Group. I'll do that one. And sorry, I can't find my, there it is. Okay. So in my broader list, I've mentioned ZipPay. Yeah, Ascent Group was down 8.23% today. They had a massive gain yesterday of around 12%. And I thought it was actually just on the back of copying SUL, which was the super retail group, went up about 12 to 14%. As it turned out, I didn't see it this morning, but they did have an earnings release. We'll have a little quick look at that. I'll just update my manual portfolio first because it takes into account the dividends. So that stock is now down 62% after dividends. Commonwealth Bank, how did that go? It had a better day. It recovered a bit today, close to 1%, ended up at 157.88, which is still down 9.42% after dividends. Coles, that was negative for the day, down 1%. And so that one's down 5.1% now. And Westpac is 33.9, and that's now down 10.74. If I have a look at I'll just finish off this watch list, see if there's anything else that I would like to mention. Goodman Group, that's down 5%. They had earnings earlier this week. I'm going to say perhaps even yesterday or the day before. Let's just have a quick look at their chart. Okay, so yeah, they've released here. They've had a down day and then another down day. So if we just pick it up from Tuesday close of business to Friday close of business, 12% down. So it's a pretty big fall. And on a company from memory that, makes quite a bit of money. Yeah, I was surprised to see how much profit that company makes. I think it was close to, I'm going to say $2 billion. I was pretty impressed with that. Let's just double check those financials. Yep, so earnings before tax, let's do here. Yeah, $2.7 billion. And I think after adjustments and abnormals, it was a little bit different, but still quite a bit of money. I think they only employ directly around 1,000 employees. That's good, but I would imagine they probably have lots of contractors and staff like that. So Accent Group. Okay, so this is one of my holdings, down 8.23%. They do retail footwear, companies like, stores like the Athlete's Foot and Platypus and those sorts of companies. They've got 890 stores with 18 different retail banners. And let's have a look at their earnings. I haven't had a chance to look at this yet, so Accent Research. Actually, let's go to announcements and just get the reports released this morning. Investor presentation. And they also have had a takeover. There's a company called Fraser Group or Fraser Co. I believe it's like a UK company that's trying to take over the Accent Group, and they've made a couple of bids now. We've received correspondence to basically sell off your shares, and they want to take control of this company. The advice from management is to decline. Yeah, the offers have been below the market price at the time, so I'm not sure how many shareholders would be willing to take less money when you could just sell it on market at the time for more. So that's an unusual request. I think I did a little bit of research on takeovers, and usually they are done at a premium of around 20 to 30% of the share price. So if, let's just say the share price was $1, not for this company, but let's just say it was $1, that a takeover a bid should be around $1.30, $1.25, in order to get shareholders to hand over their shares for that. So let's have a look at their report. So they've got, they're on a growth journey. This is their store numbers from FY22. They had 762 stores. Then they went to 821, 895, 892, so down a little bit, and then 876. So the actual store numbers have declined. So they've gone up and then down a bit, but however, their sales, not store sales, their sales have gone from $1.3 billion to $1.5 billion. They have got a store increase there. Yeah, it's interesting. So 2 years ago, they had 895 stores. They were turning over 1.4 billion. And now we've got 876 stores, which is around 18 stores less, but the turnover is higher. So what are the reasons for that? There's a number of reasons. You could be doing a higher online sales because that wouldn't count as a store. This company is buying back stores off franchisees. So I think their aim is to run all the stores through the corporate and not have franchisees running stores. So their turnover here has increased by 38% over that 4 or 5 year mark. So that's, I don't know, that seems pretty good. It's not huge. So 5 years, 38% is roughly around 7% per year. 7%, 7%, yeah. We've got an expansion into omni-channel capabilities and contactable customer database. Okay, so they're going to do more customers with I assume like a loyalty program. I know if you buy shoes from Athlete's Foot, you get a $30 voucher which you can use for another pair of shoes. So they've increased their contactable customers from 9.3% to 10.1%. So I imagine when you purchase shoes from there, they'll capture your details, maybe an email address, phone number, and then they'll send you text messages and marketing information to try and get you to purchase their products. They're driving growth through distributed brands and partnerships. So they've got, these are their brands, Hoka, Skechers, Timberland, Merrell, Saucony, Vans, Doc Martens, UGG, and then these recent brands, Sports Direct. I think they purchased this brand as another brand, and Lacoste and Norda, and they've got 11 distribution agreements. And they're also doing a bit of apparel through vertical sales growth strategy. I wonder if they're getting too diversified. Okay, let's have a look at some numbers. So $1.6 billion turnover, including the franchisee fees that I assume that's the fees, not the sales, because as you know, a franchise store will generate X number of revenue, and then the franchisor will receive a percentage of that through franchise fees. I just can't imagine that they would be adding in the franchisee's revenue if it's not part of their revenue, if that makes sense. But I could be wrong. I haven't looked at that. 876, 43 new stores in FY 26 opened. Wholesale sales up 10.8% to 172 million. Vertical sales is $137 million. Sports Direct, so they have opened Sports Direct in Fountain Gate and Chatswood Chase during FY 26, and in FY 26 they purchased back 17 stores off the franchisees. Okay, operating review, sorry. So they made $105.3 million was the underlying earnings before interest and tax in FY 26. So let's just do a quick number. $105 million, 876 stores, I think, times. Let me just get those store numbers again. 876 stores. And then their profit was 105. So 3 million. 105 divided by 876. So that's a profit of $120,000 per store, or $10,000 a month if you were to dumb it right down. I know it doesn't work out like that because you'll have some stores that will do much better than others, and some that, they'll probably close down in time to come if, they're not contributing to the bottom line. So they're going to do portfolio simplification, close loss-making businesses, Glue and AusSale. They exited low-performing distributed brands like Herschel, Superga, and Dickies. And they've got growth investment. They've launched and expanded Sports Direct, 3 stores plus online now trading. Continued TAF, which is the Athlete's Foot franchise reacquisition, 17, as they mentioned earlier. Cost and efficiency, underlying cost of doing business improved by 100 basis points on FY25. They completed a material support office restructure, reducing over 100 roles. Wow, that's a lot of roles reduced. 100 roles. Okay. Strategic direction released a 2030 strategic growth plan. They developed a material cost out plan for benefit in FY27 and beyond. So they say that the 2030 strategic growth plan is progressing well. I'd have to have a look at that. But here's some of the key metrics, key financials. Total sales, 1.5 billion. EBITDA is $290 million. Earnings before interest and tax is 105. Profit before tax is 73 million. And net profit after tax, $51 million. Full year dividend, 4.5 cents. And the full year dividend the previous year was 7 cents. So the dividend has come down for shareholders. So 7 minus 4.5 divided by 7. So the dividend's down 35%. FY26 net profit after tax was a loss. That's disturbing. So I'm not sure. They've got underlying and then they've got reported. So look, I'm not 100% sure. Let's have a read here because they've got the little dots. So underlying $105 million is reported EBITDA of 34 million, adjusted for 71.2 million of significant items. So $17.8 million in losses of closed businesses, $2.8 million in cost restructuring, $48.6 million in goodwill impairment, $2.1 million of advisor costs relating to the Fraser Group takeover proposal. Okay. So there's some one-off things and also the goodwill one, the 48.6 million is significant, but I guess it's not a paper item. It's an intangible item. Still not great, but I guess you got to get those items off the balance sheet at some stage. $17.8 million of losses from closed businesses. Well, it's good to close businesses that are losing money. So their retail overview, they owned retail sales of 1.4 billion, up 4%. A lot of this stuff's being repeated. Store network, 876. Strategic plan is here. So approximately 40, so inefficiency, this is part of their strategic plan, approximately $40 million in gross cost savings, net benefit of $15 to $20 million. Initiative programs identified through FY28 is on track. Of this, approximately $30 million. Net benefit of 10 to 15 million has been actioned for 27. They don't actually say, they just say gross cost savings. A lot of the stuff's pushed out. They actually say what they're doing. Savings I'll take that back, are being realised across support office teams, occupancy, retail, labor, IT, marketing, and AI-orientated projects being deployed to support further efficiencies. Okay, well, let's hope they can do that. Evolution, so that's the Athlete's Foot reacquisition program remains on track. So that's the buying back of all the stores. So instead of, achieving whatever their royalty component is as the revenue from a particular store, they'll be able to access, the full margin, but with that comes the operating costs as well. So the rent, the staffing, utilities, etc., etc. The program is expected to contribute approximately $14 million of incremental earnings before interest and tax by 2030. Okay. The longest date franchise expires in August 2029. So that by 2029, they will own all the Athlete's Foot stores outright and be running those. The company has more than $10 million contactable customers and 29 websites across the portfolio. Investment into CRM, which is customer, I forgot what the R is. Customer CRM, customer relationship manager. So that's the software that, coordinates all the communications and records communications. Personalization and digital experience continues with AI tools being deployed to support improved customer engagement and market efficiency. All right, well, I'm not going to go on and go through the whole thing, but this information's available. I've always thought that shoes are recession-proof. People will always purchase shoes. I guess it will just be a thing about where they purchase it from. Do they purchase it from Foot Locker or the Athlete's Foot, or if you're on a lower budget, perhaps families are purchasing shoes from Kmart or Target or one of those. So that's timed out. I'll just jump back in there. Anyway, I'm hoping that for Accent Group that they do make all those changes and transformations so that hopefully one day I can get my money back. So yeah, Accent Group down 8% today. Let's have a look at their share price, and I'll just show you where I purchased. My first purchase was in January of 2025, so around here. I'd actually traded it in around this period before, at least once, maybe twice, and then I purchased it here. It did get back to my purchase price. I think I was in front by about 1%. I didn't quite make margin, and then it did drop away, and I actually purchased a second parcel as it was falling, and then I actually purchased a third, just smaller parcel. I had some dividends come in, and I was just trying to reduce the average cost, and I think it was around here somewhere. I'd have to look at the dates, but I was sort of hoping that perhaps it would hit this sort of support line and then bounce back up, which it kind of did. Well, it went a bit lower, come back up, but then it did fall away, and it's been falling away since, and I haven't had the courage to just take a loss, which I'm not great at. So now we're down here at 72 cents, and if I get the ruler out, I think from there to here, it's down 69%, which is kind of in line with what the portfolio, the virtual portfolio says. says 66%. And then it's a little bit better than that because we've had some dividends along the way. So if we have a look at this portfolio, down 27,000 on the $40,000 investment, and I think it's 62%. So I think that's all I've got for today. Sorry to drag on with that Accent Group, and thanks for supporting the channel. I hope you have a good weekend, and the market will reopen in less than, I can't do the maths, is it less than 72 hours for those that can't wait. Okay, have a great weekend, and I'll see you on the next one.